Hello and welcome to another video on the DXY. The DXY is still holding support. I've slightly changed the microstructure here to the last or compared to the last update because of the the structure of the decline and the structure of the rally after the July low. And honestly, I mean the move up was, you could say, fairly aggressive from the July low. But it was only a three-wave move up. That leaves us without clear confirmation that a lasting low has been established. But you might remember from previous updates, my view is that we are probably very, very close to a substantial low on the DXY. What we have seen is, and you see that here from the 2022 high, from that swing high, you can see that this was an A wave down in 5 waves. That indicates that the trend overall was down. It took a while for this B wave to play out. It also took a while to stay bearish, or it took some energy to stay bearish in this period, as you can imagine. And then the C wave to the downside has played out nicely. We've even reached standard targets. This is the blue zone. That's just, they are standard targets. Okay, they're, $97 is the 100% extension. That level was reached, so it's not much of a surprise that we have seen a reaction to that level, actually. But the reaction is not yet in any way impulsive or convincing to the upside. So a low might be in. I'm watching for it. It's a bit too early to confirm, in my opinion. But we are in that trend reversal zone down there. And in an area where, yeah, we might get one more low. I think at this point, I slightly prefer one more low just because we have no evidence for reversal. And I think that is also what I highlighted in the last updates, that one more low is still what I prefer, just because on the nano level, I can make a case for one more low. And there has only been a 3-wave move up. What would that look like? Well, in the white scenario, we can say this was a wave 1, wave 2, wave 3, wave 4, and the wave 5 might get one more low. But then the wave 5 could be a diagonal pattern. 1, 2, 3, 4. The wave 4 is high, so that's a bit unusual, but it's possible in a diagonal, like an expanding diagonal, and then we can get still a wave 5 to the downside. I would not rule out one more low. I mean, it's with only a 3-wave move up from that July low, it honestly leaves us without confirmation that a substantial low is in. Further confirmation that we get another low would be a break below $97.18. And you can also see that the last bounce here, it's not convincing yet. So that means next support is around $97.19. That's a 78.6 retrace level, and also here the swing low from the 23rd of July. And then we have another low here around $96.40. And then the trend line that's currently coming in around $95.60 as support, and $94.70 as the next Fibonacci level below. Yeah. So that is what I am tracking here to the downside, to really suggest we have bottomed and that we are in a larger recovery, which is when I will start to assume we've actually bottomed. We're already very close anyway, so we are in that area. But to really confirm that, I would want to see the price break above $99.67 decisively. That is because the move down in wave 5 should be an ABC structure, and resistance for wave B is highlighted in red. So any break above resistance could indicate that we are already on the move to the upside. This B wave should not stay above $99.67. Yeah, maybe a wick, that's acceptable. But yeah, when we break above $99.67, it would be an indication that we're also going to break, most likely, above the August high, and then are in a breakout to the upside. Yeah, that's the update on DXY. Hope you enjoyed it. Thanks so much. Bye-bye.